requesting its agreed to buy
Alright,
carrier
so
security
let
business
me
for
start
about $5 billion
recording.
in cash, part of an effort to enhance and strengthen its building automation.
Obviously, background. Alright, so in about a minute, the market is going to open. So let's see market fluctuation. This is the dollar index. It is jumping. Alright, so dollar index is jumping, right? At earlier recording that I have, we were trading right about above 103.5. I said if you saw 104. Alright, that's the market opening. That's so let's take a look at, so dollar index is jumping, gold must be dropping, and it's dropping. Okay, so let's see if 2000 will be that level. Let's sell gold at the market. Let's do a practice trade. Selling. I'm looking for 2000 as my initial target. Okay, so let's take a look at dollar index jumping. We might find some resistance around this double top created 104.4. Let's change that color. All right, so we have that. Let's see if we're gonna calculate 104.3640 to 104.24. Let's take a look at gold. So in theory, if we see that we are going to be seeing a push on the price of dollar index right about let's say 300 pips, right? Then we should receive that amount of fluctuation to the downside on gold, so the target will be hit. So let me take up protection on that trade. Let's take profit at 2000. Let's see if that will be hit. And you want to take a stop loss. All right, so here's where you will say, okay, I'll do the stop loss, but how much will it be of gain? So now I'm looking to make $96 or losing 23. So you can run that off to 25. Let's say, for example, if that's what you're saying to yourself, because you want to win pretty much as time as you're risking. So that's your risk, about 25 pips. Then you have that trade set on, placed on. Let's see what will happen as we see now in the futures market. Gold is actually jumping. So if gold is jumping, right, it's trading higher. Then let's go down into a 15-minute chart. And here we are in 15-minute chart. Dollar index in a 15-minute chart as well. In a 15-minute chart, it is dropping towards 104. It has rebounded, or is it continue to fall, or has it rebound? So we want to go deeper. Let's go to 1 minute. Okay, so 104 has actually been broken, and we're trading right below that. So the initial number that had come out was expected, right? So we saw that expectation of the market was 90, right? So the let me see, hold on for a second. So taking a look at what could have been for yesterday's yields, we saw the low yields right around 409 to about 411 area, and I reckon we could say that, let's see if that's gonna hold for next week. Will it hold for a while? I think they go back up. That's the thing I really focus on, is just how much. And trusting these numbers or not, we see up 4/10 month-over-month earnings. That is the biggest going back to July of 22, when it was up half about 1%. But if you look at year over year at 4%, that is the weakest since July of 21. Okay, so that is something I find a bit disturbing, especially when the earnings is such an important aspect of why traders, of course, will maybe deem a soft landing or where we are on the inflation. Okay, on the inflation GPS. Now let's see if taking a long term looks when the unemployment has increased. Okay, see, I think it's going to remain to be seen, and that doesn't quite do the more recent unemployment claims suggest that there was an increase in continuing claims, but overall I agree that it is consistent with the cooling labor market, and we're going to have to have some wiggles, and we always expected that. So taking a look at our trade, we might be losing in our trade. Okay, actually, yep, we are plus $7-8. We sold out 210. So my target, I said, it is to the downside. It might take profit. Let's take a look into this one deeper, and it's actually I'm actually like $10 because I came in at 2010, not $10. Now in the futures market, this will have been a lot more because you will be using a lot more leverage. But we are trading CFDs. So trading CFDs, we want to be able to understand what affects because what are CFDs, contrast for difference. So we want to be able to take a look at what scenarios, outside scenarios, will have an impact on price. So like today, having an impact on price on gold. The number was just right around the same as I mentioned earlier. That if we saw that same number, it was going to be taken as a positive. So we'll probably see a jump on dollar index, so therefore bringing gold down. So that's why we're taking this trade. So let's see how long will it take for gold to retrieve back down to towards the 204 era, which was earlier today, 3 minutes before the open to the trade. So we're gonna stay in this trade as long as we possibly can. Talking about, let's take a look at other assets while we wait for this to happen. Either I get stopped out or I take my profit around 2,000. Now, am I being too greedy? The day has just begun. So let's see if I could just take my profits and let's say we will meet the low of this previous candle, 2007.87, and take my profits. But right now I'm actually giving getting some profits back out. I'm wrinkling right around there. So let's take a look real quick at crude oil. What is it doing? So crude oil is actually, this is a daily. On a daily, it's retreating from making the high of 71 to 58. So let's go down to a 15-minute chart and take a look at what we could expect. Will there be a trade on there or not? Let's see what happens. If this thing loads, first of all. Alright, so let's go back to our trade. Alright, so I'm up $28, $29, $25, $30. I could take my profit now if I wanted to, right? Because I'm profitable. So that could be one real quick trade that I'll be in it to win it. I'm winning right now. That's again. Will it take? How long will it take for the market to drop to 2,000 profit, or should I just come around and just do a 2004 first? All right. So let's bring it up to 2004. Let's just modify that. Okay, now we're at 2004. Now, am I still too far out? Because now my profit is less, and my risk obviously stay the same, about 25. So I'm looking for $70. So let's see, I'm at 52. I'm at 51. Can I hold? Patience. How much do you want? You multiply that by other amounts. But just for educational purpose, I'm gonna take I was, we were right on the direction of the trade, and that's basically how you can have a look at trading the moment of the NFPs. When the number comes out. CPI is the next one for next week, so let's keep an eye on that one. All right, that's it for me today, and I invite you to join our YouTube channel, Vantage Plus, okay, and take a look at our videos and come join us. We'll have fun. So let me close out this trade, close position, closing that, position closed, and that's it. All right, so I'm gonna post this, and let's have a great trading day today. And this is Giovanni Benacourt with Vantage Markets.